Hi guys, welcome back. Today we'll be taking a look at the US market. Before we begin, remember take a second to give the video a like and subscribe to stay updated with the market, and you also greatly help out the channel. So without further ado, let's start off with SPY, S&P 500 ETF. So from the March 2020 low of 218.26 to a recent high of 479.98, if you look at the Fibonacci supports, you see that the 78.6% is at 423.97. We did see some bounces here. Thereafter, we saw a greater bounce somewhere near around 410 levels. So the next support, or at least a bounce that I'm looking at, would be this 380 at 61.8%. So just last night, we actually bounced off this the 380 for SPY. You can clearly see that we had a flushing all the way down to about 2 to 3 hours left in the market on Friday, and thereafter we see a nice closing candle. Could this be a reversal, or could this be a rebound? That is not exactly sure, but at least for now, it is a good potential and also a good start for at least a stronger rebound. Next up, we also have QQQ. So QQQ, similar situation, but obviously since the Nasdaq components are weaker, you can see there's 61.8% at 315. We found some support here, and thereafter we rallied up. So now we're looking towards this 50% compared to S&P 500, which is only at 61.8%. So this QQQ, after it rebounded, we found the next support at 50%. So what market makers would love to do is, if in the event that everyone is watching this 286, then perhaps there may be some stock losses that, or at least stock hunting that is triggered just below this 286, perhaps. So 282, 284. So we did see a flushing all the way down to 280. So S&P or SPY was at 380, and QQQ was at 280, something very easy to remember. And thereafter, we see a nice closing candle as well. So could this be a potential rebound for next week? Or it could also be a potential reversal. As of now, I would think that a short-term rebound is more likely the case. So next up, we have Dow Jones ETF. So this one, you can clearly see that it has not even touched the 61.8% at 297. In fact, this $300, 300 psychological support level is holding pretty well. And just yesterday, we only hit the low of around 306. So it's still pretty far away, and the Dow Jones is still performing better than the S&P 500 as well as the Nasdaq. Next up, we have Apple. So Apple, it's a stock that is very closely followed because it's a very heavy component, from a high of 182.94 to a low of 53.15 in March 2020 during the COVID crash. We are looking towards this 61.8% at 133. True enough, just yesterday we managed to get this 133 bouncing off. In fact, our day low was 132.61. So could this be a sign of reversal? But at least we would likely to see a short-term rebound for the very least. Do bear in mind that stocks do not fall in a straight line, so we do tend to form wave patterns. So if we do go down by too much, do expect some short-term rebound before we can continue going down further. Next, let's look at Microsoft. So Microsoft is slightly different. You can see that at 61.8%, it was already broken through at 266. So compared to Apple, it doesn't seem to be very favored. You can see that previous resistance here has now turned into temporary support. Whether it will break down further, I do not know, but at least yesterday, and the index has seen some rebound. The next 50% will be at 241, and we are still about almost about say 5 to 10 points away before hitting this Fibonacci at 50%. Next up, we have Amazon. So Amazon, you can clearly see that it is slightly different. So you can see that this is accumulation phase, the uptrend. The big boys are distribution, or at least distributing to the retail investors. And thereafter, this is a dumping phase. So do expect more downside for this counter. Compared to Apple and Microsoft, you can see that they were actually holding this 61.8% and 50% supports pretty well. However, this Amazon is a lot lower. In fact, this 38.2% also broke down. And we're just holding barely at least 23.6% at 2132. We closed the day at 2151. So there is a chance that if we were to go back up, then I'm looking at this strong resistance here. You can see that all this was previous support being tested. So this is around $2,700 level. And there is also a gap that needs to be filled, which is around here from 2,600 to 2,700. So if we do go back up, then it's likely for us to face some resistance here as well. Ultimately, if we were to break down this 2132, then there is a possibility for us to retest the lows of 1626 again for Amazon, which was the March 2020 low. Moving on to Google. So Google, like you see, it's broke down this 61.8% at 2258. So there is a chance for us to test this 2000 psychological support soon. But once again, we may see a rebound first before pulling back down even lower. If we were to break down the 2000 psychological support, then I'm looking at 1781 and 1486, which is still far away. This 1486 is pretty far away, but this 1781 may be a possibility for Google, perhaps in upcoming weeks or even upcoming months. So next up, we have a favorite Tesla. So Tesla, you can see that it has dropped quite a bit. In fact, yesterday it dropped almost over 10%. And looking at Fibonacci supports, we first saw a bounce at 61.8% at 800. In fact, before that, we also saw 1000 holding. You can consider it's pretty well, but obviously there was some resistance here along this line. So if we were to go back here once again, do expect sellers to appear. As of now, we have not bounced off the lower part of the channel, but looking at the 50% Fibonacci support at 656, we actually managed to close above it. So once again, if the support is at 656, market makers would like to flush out retail investors. This is a strong support here. Retail investors putting their stop losses here, get triggered, and then close the day above this support level. So it's very similar situation to this Tesla. We closed at 663. So next support that we'll be looking if 656 were to break down will be 518 and also 347. 347 is pretty far away, but 518 may be achievable if the $600 psychological support were to break down. Likewise, just below $600 psychological support, perhaps at 580 to 590, there may also be some potential stop hunting as retail investors may be putting their stop losses just below it. Next up, we have Facebook or Meta platform. So Facebook and Meta platforms, obviously, it already broke down all its supports level compared to the one in March 2020. So there's no need to look for the Fibonacci supports. Looking at the closer view, you can see that on its recent rally from 184.78 and from a recent high of 224.30, we actually pulled back down. So looking forward, it faced resistance at 50% at 204.54, and we could not clear this 209.20. On the supports on its way down, we saw 190.12 being broken, but we still managed to close above it at 193.54. If we were to break down further, then I'm looking at 182.05. Then after we test this, before that, we were likely to see this 184.78 being retested first, before going back to 169.00 as a possibility. Or we may also create a new low, perhaps at $160. Looking at this conversion and rate baseline here, you can see that it's currently being rejected off. So long as we do not cross this blue and rate baseline, then do not expect any more upside for this particular counter. So hopefully it can continue to go up and the blue line would trend up with the red line below it. Then that will be a sign of potential reversal. Next up, we have Nvidia. So Nvidia, this is quite a tricky one. But you can see that semicon is a lot weaker compared to the other stocks like Apple or Microsoft. 50% already broke down. So 38.2% 160 seems to be a very, very strong support level here. As of now, we have not tested the $150 psychological support. It's constantly avoiding it at around 156, 157. So it shows that buyers are actually stepping in to actually support this counter here. So as of now, 160 has not been broken. If we were to break down, then we'll test this ugly 116, which is obviously still very far away, about $40, $50 away. So I'm not too concerned about it. Will we have a short-term rebound all the way up to perhaps test this rate baseline here? Then there is a possibility. The rate baseline is currently at around 191 level. So there's a possibility for us to revisit those levels. And like I said, the stocks don't fall in a straight line. So we do expect rebounds to happen before we were to continue lower prices. Alternatively, there may be a rebound, and if we were to start to create higher highs and also higher lows, then there may be a reversal of trend to go back to test the recent highs and also the all-time highs. So that's about it. As of now, we have seen SPY bouncing off 380 and also QQQ bouncing off 280. So it seems quite promising on a Friday. Hopefully next week on a Monday, there may be an initial flush one more time before a strong rally on Monday or even on Tuesday. And hopefully there is follow through. If there is no follow through, then there is a lot more selling pressure and that would not be too good. But I do expect a short-term rebound. Whether or not we'll get a reversal, it will depend on the market sentiment and also depends on the market makers. So if there's any changes, I'll give you guys an update. Thanks for stopping by. Till we meet again, I appreciate the manipulation.